Hello everyone, I'm LA Little and this is your daily NeoTA wrap where we take a look at these markets and we do it from a neoclassical perspective each time. We ask ourselves one thing: what happened today? What does it tell us about the coming days? I do this show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel LA Little. If you want to send questions to me, there's a couple tonight. We'll tackle those here in a bit. Just come over to NeoTA TV on the TA Today site. You come down here, it gives you some information about how to contact me, either through a text or through email. As far as these markets, what did we do today? Well, it was actually an interesting day because if you look at what happened intraday, you're going to see, a market was just grinding and grinding higher, and then all of a sudden, out of nowhere, you got a big spike down at the end of the day. If you look back at the events overnight, we had China come out and say, okay, we're not going to keep these rates so high. We're gonna take the reserve requirements down. That's going to push about 600 billion yen into the market over there, try to juice it. That got, of course, the Chinese ETFs going, got the general market going, and the Greece situation was kind of forgotten for a while. Markets pushed higher, and when you look at the intraday, and if I bring that over, let me grab it for you here, you're going to see a nice push to the top side. Here we go. Nice push to the top side, all day long. And you start down here, work your way up. So 2042 up to 2051. And that was all fine and dandy until the last 20 minutes. These are 10-minute bars. And you see it just took a big dive. That was because news came out that the Central Bank of Europe is no longer going to accept Greek debt. So if they're not going to accept Greek debt, that means that the various banks in Greece are not going to be able to swap their debt, which is the Greek debt, for other currencies. So in other words, the Germans, or shall we say the ECB, but probably the Germans, have decided to twist down the screws a little bit here on this new Greek leader, and that led these markets to sell off. We ended down negative on a few. That Russell, it never tells the truth. It was actually down as well. So the only one that was up was the Dow, and just slightly. It was up about, well, just like you just saw. What was it? 17.6 closes at 1776 closes at 1767. So closes almost 100 down from its highs. Disney was driving it. NDX was being driven by Apple pretty much all day long, being pulled against by the IBB as those continued to suck air. Gold got a little push up today. We had silver up as well, bonds up, dollar rebounds, and then our friend the oil market down almost 7%. In the pits itself, it was down about 8%. That follows a big move to the upside, and I was talking about it last night, saying, hey, and actually, I think I actually talked about it. Oh yeah, it was this morning. If I go back here, if you come to the front of the TA Today site and you pop into, just hit up the banner there and go to the front page, you can see here I did a little number on it this morning, talking about the oil market and the fact that you really wanted to flip around. You wanted to trade it on the upside, and then you want to flip around and trade on the downside. And there was almost a 20% move up down. Singular, if you're doing any of the doubles, that would have been a 40% move. I mean, these are crazy moves taking place nowadays in these markets. So a lot of volatility. Volatility just continues. Let's go look at the numbers themselves. The first thing you're going to notice is we're coming back up, and we've drawn this enough now that you probably know it by heart, but as we're coming back up here, right, you kind of got this range, and this range is still in effect, right? It's been going sideways now for about 6 weeks. If you take the bigger range, right, this one outside here, it's been going on longer than that. So about well, it's about 4.5, 5 weeks inside here. Yeah, it's about 5 weeks. And then the bigger range is almost 8. That range, as we get up towards these highs, it gets harder and harder to go up, especially when you skyrocket just like we did again. So what does it do today? It gets over, back under, less volume. Is that an extended move? Well, in this market it's not, but it is an over-under, and that says that, hey, this thing's going to try to trade down tomorrow. Dow did basically the same thing. If I look at the NASDAQ, a little bit different of a story, gets over, back under, has more volume than yesterday. And if you go look over here at the big bar, it was trying to get over 47.42 was the high there. 21 million, 22 on this, so it pushes over it with more volume. This one's telling a slightly different story, and that is that it wants to try to go test it again. The NDX looks basically the same, also wants to go test again. They both failed, though, at that critical bar. And if we look at the Russell pushes up, gets almost to that break-even point again. Again, you know, you got these ranges, and these ranges, the longer they build out, the tougher they get to break. And so the Russell's range looks about like that. And as it comes right up to the top of that range, it gets very hard to get over. What does it do? Same thing as the SPX. So you have a situation now where 2 of the 4 majors trying to go down tomorrow. 2 of them look like they want to try to test. Which ones are telling us the truth? Well, you don't know unless you go look elsewhere. And if we go elsewhere, let's go to the OX markets. Because the first thing we saw when we talked about this last night is that the dollar, even though it had big volume here on this, when we looked at the FXE, the FXY, it looks to me, or it did last night, that we were actually going to try to work our way back up. That's what we did today. So the dollar is going to trade up here now. It's kind of told us this. It's going to trade up here in this larger range. That range is probably in this area, and that's where it's going to try to consolidate before it tries to, you know, to make another run higher. So the dollar isn't backing off. And without the dollar backing off, that does what? It puts pressure on the oil market. And that's what happened with the oil. Now, there, of course, it wasn't just the dollar. We actually had inventory numbers come out as well. But I was talking about this in that video. If you watch it, you know, this has been a compressed move down. You're going to get these violent spikes back up, and that's exactly what we get. But they're just violent spikes. They just flip around and go back with the trend again, and that's what this one's doing. Oil pressured by the inventory numbers, also pressured by the dollar. And if we look at the TLT, you know, there we had the bonds coming back. They came back into their support zone. Pretty good volume on the way back. This, just like the dollar, looks to me like it's going to range trade and try to build up strength to go higher. If you go back over here and draw this, that's the larger range. This is the smaller one inside of it. It's probably going to trade in this range for a while before it also tries to go higher. So if the dollar and the bonds and the oil are back to doing what they used to do, what's the market going to do? Well, it's probably going to do the same thing, which means it's going to gyrate wildly in that range. And so then, to try to answer the question of what's going to happen tomorrow, part of it is in the world markets. And if we go to the world markets, you can see here, you know, with this Greek situation, these markets are stretched to the upside. Okay, so this is the German DAX. This went from 94, 109. That's 15%. Straight up. It's going to pull back, folks. It is going to pull back, and I don't have the numbers on it here, so I can't quite do the reads. It came back into this big bar. Well, it didn't quite make it to this big bar. But just like you just saw what I was just showing you on the dollar and on the bonds, this thing's going to do the same thing. It's going to trade sideways, and that's because nobody knows what the heck is going to happen in Greece. And as a result of that, you're going to get some pressure in these markets probably as quickly as tomorrow. If I look at the CACs, it's the same way. So I would expect they trade back down. And now it's possible, not probable, but it's possible they could come all the way back to do retest regens, which would be a great buy if they did. But in the least, they're probably going to build out some sort of a range. And there's nothing in this trade yet to tell you that. But it just, things are lining up elsewhere to make you think that's what's going to happen. And then if I go over to the other side of the world, Hong Kong, these guys should trade higher tonight. It will be curious to see if they actually get up back towards these highs. That was actually China. If I look at Hong Kong, it's already up there. So that will be the read tonight, is what do those do. And then the topics, which is Japan, the Nikkei 25 or 225, is just range trading, and Taipei's doing the same at the highs. And actually, I was going to look at India to see what it did, and India is finally coming off with volume. I suspect these world markets have done as much. Asia's going to get a little bump. Europe's going to get a push back down probably. I suspect they've done as much as they're going to do to help our markets. Our market's going to be left to their own. All we have is Fed speakers. There's two big ones tomorrow, the next day. That's, if anything is going to happen, it's going to be off of them, and it's going to be news driven now, off of anything that happens with ISIS, potentially Russia and the Ukraine, and of course Greece. And so that's where that's where everything's happening. That sort of action is what's going to drive these markets. And so when you get into a volatile market that's news driven, these things can change on a dime. Just as I showed you here, 10 minutes you walk 25 points off this thing after hours as well. I mean, those are big moves, folks. I mean, typically that thing trades 10 to 15 points a day. It's doing 15, 20, well, it's doing 20 points there in a matter of 10 minutes, right? That's a huge move. That's a fast, huge move. Looking at the sectors, I was telling you about the IBB trading off. This is still expanding volume, coming into this big volume, wide price spread bar. It looks to me like this is going to hold and try to bounce. And so that's going to try to take it back up. The SOX is still trying to bounce. The XLE actually held up pretty good, even with the oil trading down, but I don't know if that's going to hold. XLB did an over-under. That looks like it's going to try to pull back. The big financials also over-under, also look like they're going to try to pull back. And contrary to what we just saw in the NDX and NASDAQ at the top of the show, the XLK trying to push up, gets over this big breakdown area, doesn't have any volume. This thing is going to flip back around and try to come back down and test these lows again, and it should, because that's where all the volume is. This is the one to watch and to worry about if you want to be bullish, because it wants to break to the downside. And if technology breaks to the downside, this market isn't going topside, especially if these financials do the same. So it looks to me like we're still stuck in a range, nothing's changed, and we're going to get some backing and filling here pretty soon. All right, I'm going to switch over now to a couple of questions that were sent in and address those. So the first one has to do with SNE. So let me pop over and grab those charts while I tell you what the viewer question is. And we've looked at this before. This gentleman has been trading this, and I think it was last week we were talking about it, and we were basically talking about the situation where it had, here we go, it had a nice setup where it was breaking out over multiple swing points on multiple time frames, and I want to show you that here. Here's the monthly. You can see it breaking over this swing point high. It did it on the monthly. It also did it on the weekly. Let me grab that chart again. There's your weekly. It jumped over it last week as well. And then, of course, it jumped over it on the daily. And so the question was, here's the daily. So it was cute, actually. He says, sorry to be persistent here, but this is a multiple time frame swing point high break, and it's working. I think he was excited. S&E moved strongly today, 11%, 3 times average volume, and into the 2010 July swing point low on the monthly. So let's bring that monthly up and look at it. Oh, so he's back here on the 2010, and it's coming into it. All right, so that low is 25.85, and we're into it. All right, cool. Since it hasn't been there for quite a while, more than 6 bars, can I assume that the retest region on the swing point low could move all the way into the top of that bar? Is that the high probability? Well, no, actually it's not. It's the low probability. So when you go more than 6 bars, usually you're only going to test the bottom, the bottom part of that bar. So in other words, this is probably going to test into the bottom, not the top. Now that's what the probabilities are. Having said that, you've also got this trading with multiple swing point breaks across all time frames. So then the question is, like, which one of those is stronger? Well, this was like 4 years ago, whereas this is happening now. So I tend to put more weight on what's happening now versus what happened then. So that would be the answer to that question. It looks like it will have a lot more volume too. Only a few days left into the month, and already 14 million. Only a few days into the month and already 14 million. Yeah, it does look like it will have the volume. So I think that answered your question. Let's go back now and look at this other question, though, or actually the rest of the chart. So on the daily, you got a nice big spike up. Let me see that weekly again. Okay, so you have an ABCD structure here, 1657. That's about 6. That's about 2571, and we're there, right? We've already hit it. So or almost hit it, right? So ballparking it, we're almost there. Okay, so when I see that, right, the first thing that tells me, and the fact that we just got this big gap up, is you're probably going to see this thing do some backfilling. But it's bullish, and it's going to go higher. So you don't want to, one of the easiest things to do is trade yourself out of a good position. So you really don't want to throw anything away here. And you were asking me before, and I was saying if it failed up here at the highs, right, if it tested this high, back then that was a lot of volume back then, right? But if it tested those highs, you might want to take some off. I don't know if you did or not, but it never really came back to test that high. My point was that let it go as far as it wants. Then when it starts to pull back, let it come try to test it. If it fails, that would be the place to take some money. Well, it never quite did that. So, from that perspective, I don't think it did. Let me see. That high was 2347, 2340. I actually did. That was a failure there. What was the volume? 3.488. Yeah. So that would have been the place to take a little bit and try to get some sort of a pullback into the swing point high. And I was telling you at the time that if you're antsy and you wanted to take some, that's how I would do it. But as you can see, multiple time frames, they're just powerful beasts a lot of the times, and this one is. So I wouldn't trade myself out of a good position. If you didn't take anything off here, you get a failure up here, then you could probably take some, because now you've actually done ABCDs up. And let's check this one real quick. Is that the same one? 2034. No, it's not. So that's 360. It's 2650. So this one actually projects to 2650. So somewhere up in there, that would be this one playing out and your weekly playing out. That's probably anywhere from the highs today to about 2650 is where this thing should try to get and start to pull back. Let's look at the other one. The other one has to do with GDX. This was a text message, so let me check this one right quick and see what it is. It says, can you give me your take on GDX looking to go long, but the lack of volume is concerning. You know, folks, when you give me questions, it would be ideal for you to tell me the time frame, because that has a lot to do with what you look at. And so I happen to have the daily up, so let's look at it first, and then we'll take a look at the weekly as well. Now on the monthly, actually, let's put it in context here. These things have been blown out of the water for so long, okay? And it has volume at the bottom on the GDX itself. Okay, that's not a good thing. And what does that tell me? That tells me that after this thing bounces, it's probably going to work its way back. It's going to take a while to actually bottom. The good thing is that it did get over, and this is the monthly, 22.19, closes at 22.29. So it actually got over the swing point low, and if it can hold it for a month, then that says, okay, the trend has probably changed, right? And no longer is it a downtrend, but it's a sideways trend. So if you can get one more month and stay up in here somewhere, then that kind of changes the picture. Then you can actually, start thinking sideways, which kind of changes the way you look at things. So that's the monthly. If we look at the weekly next, let's look at that one. Also volume at the bottom has a nice push up. This one's doing a retest regen. So this one hasn't gotten over the retest regen on the weekly. Actually, I take it back. It got over this one. That put it into a sideways trend. Now it's wrestling with this one, right? Because when you come back up, usually, after a big sell-off, you have multiple layers of problems, right? And you got to get over them all. So far, this is doing exactly what you want. Now, the weekly, the swing point low it's coming into only has 130. You're doing 250, 275. You're pushing this thing with really good volume. The real test, it looks like to me, is if this thing does get another push up and gets over this area, right? This bar is the one that's going to give it trouble along with this one. And so that price point over here, that low is, let's get a number, 24.23, and this one's 23.68. So, yeah, I think this is going to be, this area here is going to be the issue, right up in there. And so I think even if this pushes up a little bit, unless it really gets some power from something, that's going to be the resistance zone that gives it trouble. And then of course if it does get over, it's the highs it's going for, and then that would be this ABCD structure to the top side, right? This structure, if it breaks out, is going to be a nice ABCD structure to take it up to here. So it has the potential for still a larger move. I actually like the way it looks. I'm invested in some gold stocks myself, and I think this thing's going to break to the top side. And I don't know if it's going to be the Greek situation that does it, what's going to do it, but I do like the way they're set up, and I probably would be trying to trade it that way if I were you. So yeah, I like the setup. Okay, let's see here. Tomorrow you've got conflicting data in terms of which way we want to move. We know we're in a big range. We also know we're totally news driven right now. Recap everything you got. Earnings, they're not taking this market higher. Economics, that's not taking this market higher. Greek, that's not doing it. What's doing it? Central banks. China. I mean, how many central banks have already cut rates or cut reserve requirements this month? We saw it in Australia. We saw it in, I think it was Singapore. We saw it in, the ECB with QE, which is a big one. And actually, I think there's like 2 others that cut rates as well. I can't think of who they were right now. That's what's driving these markets. I mean, I can't see anything else. Do you see any other catalyst? Look at all the stuff that's a problem. and then look at what's moving this market. What's moving this market is the central banks. And I don't think they're going to go away. But that doesn't mean that they can drive it higher, consistently higher day after day. It's a struggle. And they'd probably be quite happy just hanging it up here until QE really kicks in and starts doing its thing. So, that's the battle. That's what's going on. That's why all this gyration, when we look at the S&P 500 or any of these major indexes, right? That's what's going on up here. You can see it here. It's consolidating. It doesn't want to give it up. So far, these have not given it up on the weekly time frame. They've tested that low. It's still a bullish retest, regen going on. Now there's some sectors that have given it up, but the market, the indexes, haven't. If we see additional weakness in the sectors, in particular XLF and XLK, especially if biotech keeps going down and the XLV goes with it, these indexes will roll over. It's almost a guarantee, right? Because that much pressure to the downside is going to push these indexes lower. Because they've been weakened already. Now, if you start seeing those sell off, they're going to take it down because they have too much effect. It's too much percentages of the total. So that's what, if I'm watching something, I'm watching, well, of course I'm watching the indexes, but I'm watching the XLK, I'm watching the XLF, I'm watching, industrials and the XLV. The industrials I didn't show you, but they held up pretty well today. So, that's the story. The structure's in place to break to the downside, to break fast. It just has to get down there and do it. Doesn't mean it will. It's just the danger. All right, that's it for tonight, folks. Thanks for joining me. Have yourself a great one. I'll see you tomorrow when we wrap up the week. Have a good night. Take care, and I'll see you next time. Good night.